Hey everyone, it's Kirk here again at Option Alpha. So in this video, we're going to compare 5 different 0 DTE profit targets, see how they performed against this baseline scenario 0 DTE strategy. We're going to use the backtester to do all these. I'll put links to all of these backtests right below this video so you can run your own analysis. Check out this one, create a bot from it if you want to. But I think this is pretty cool because usually people will ask, when do we take profits? How do we know? And you can test this right inside of Option Alpha. So here is the baseline strategy that I just ran. This is not a strategy I run right now, though it's an interesting strategy, so might consider it for the future. But I actually did get this one, by the way, from looking at some versions of top backtests that people had ran, and then I kind of modified it just a little bit to kind of fit the style that I have for testing. So here's the baseline strategy. Right now, it's a 0 DTE strategy, 0 DTE for SPX. It's actually an iron butterfly, and the essential strategy, or kind of like the main concept of the strategy, is just to do a slight, kind of like slightly bullish, like ever so slightly, basically $1 above where the stock is trading at the open or at the stock at the time. You're doing this very slight bullish tilt iron butterfly. So your short put spread is $1 above where the underlying price is. They're going to match the short call spread the same, and then you're going to do a $5 wide spread. So as far as like capital requirement, it's going to be a very cheap trade to do. It's not going to require a ton of capital to do, but it may not hit all the time either. So that's kind of the bad side. The downside too is it may not hit all the time. So starting capital for this test was $10,000. We did one contract at a time. So just doing literally one contract at a time. Entry time is about 1:50 in the afternoon. You're doing this Monday through Friday. You're skipping FOMC crazy days because that would happen basically right at about 2 o'clock. So you're not going to do those. And then down here, you can see position criteria. This was pretty standard. So we're just including some slippage, of course, on exit and making sure that we include that slippage in there. No entry filters, no stop loss, no profit taking, no nothing right now. Just a very plain vanilla iron butterfly strategy that you might want to get into right around the end of the day. So how did this strategy perform? It did okay. It went through a good early period. Then it had quite the lull period. And then it had a nice little run here. And it's been kind of generally sideways into 2025 here, but you're kind of ending on the peak right now. So we'll see what ends up happening with this one. But let's look at some of the stats in here. This is important as we start to move forward. So total P&L was profitable, of course. The low and max risk were pretty decent drawdowns, about 20% or so, 25, that's like almost 38% from the initial capital that you started with. So those are, those might be potentially tough on those drawdowns. Win rate, very low on this strategy. That's something that we're going to want to focus on for potentially testing. One of the ways that you can improve the win rate, of course, is to take profits early. So we'll test this hypothesis in this video to see if we do that. Win streak, we only had 4 wins in a row. Loss streak was the killer. And this is probably to be expected in this type of strategy where you have a very narrow peak iron butterfly and you're trying to capture the market in a very narrow range. So it probably would be expected that you would get a pretty good long streak of losing because it's easy for the market to move outside of that range. So 70% of the time you were a max loss. Few trades filtered out, pretty high trade count, so that's good. We know these numbers are based on lots of trades, which is important. Average P&L still okay at $9, even with the losses that you went through. Return on risk was decent. The entry risk that you had per position was about $64. So even though you had 32 losses in a row, again, your average position is risking about $64. Although, again, you do lose most of the time. You're losing 75% of the time, right, versus winning. So the premium that you're collecting, you're taking in a big fat premium. Again, you're hoping to capture some portion of that premium as you go for your strategy. So it's important to look at that as well. Profit factor 1.19, so almost 1.2, pretty decent. Definitely above 1, which is what we're going to want to look at. So if you want to spin up some new versions for testing, and I've already done this to make it easier for you. I've gone through this a number of times in different videos, but all you need to do is hit the compare button up here. You're going to go into compare mode basically in the backtest. You can click these 3 dots over here and you can add a variation. What that's going to do is it's going to replicate everything that you have in that test. Then you just go down here and you make your changes to your profit taking, which is what we're going to test. You can do something like 10%. And I always do require 2 consecutive hits at the profit target. Essentially what that does is it weeds out random moves in the market where maybe for a fraction of a time you had a mid price around the profit target, but it probably wasn't realistic maybe that the trade was going to get filled. So this is a little bit more aggressive to do it this way, but I think it's a little bit more realistic. It tries to get to those more realistic profit targets that you would eventually see. So anyway, so we're going to show you what the results are for a couple different back tests. Again, remember kind of these stats. So here's the first one. This is 10% profit target that I ran. So again, I've already run these for you to make it easier. I'll put links to all these below in the video so you have them. So this is 10% profit. You can see that, just visually as we look at it, and this is what I kind of go through, is visually it did smooth out the P&L curve for this strategy. And ironically, you ended almost at the same place. So from like a smooth P&L perspective, you spent a lot more time above zero in the 10% profit range, and your P&L was much smoother. So taking profits early, essentially the idea that people try to do here, which is why I tested it, was to go ahead and take profits early. You're going to capture a big premium on entry, and then if you get a quick profit during the day, capture that quick profit. So if we go down here and kind of compare the stats side by side, you can see we didn't really give up too much on the high P&L, like the total P&L. Your high P&L was very similar. Your max risk was cut essentially in half across the board. And so you did see your profit factor start to increase as well. So that's a good sign. We got into essentially the same number of trades here. You got your win rate was almost doubled by increasing or by starting a profit target. That's probably going to be something that you would see most of the time for profit targets, is that you find that you get more win rates out of that strategy. Doesn't mean it always translates into higher profitable trades, but it does mean that you're usually going to take profits more frequently. So it's just going to be a matter of if those smaller profits taken more frequently add up to more than your losses that you're going to take. So in this case, we also reduced the loss streak down significantly. So we cut that down from 32 to 7. That was a big improvement. Win streak was obviously improved because we're taking profits early. The number of positions that reached max loss was cut essentially, well, not necessarily in half, but about like 40% or so. Your average P&L stayed about the same. Your average return on risk was about the same. These are all really cool metrics to see. So you can see you're risking the same amount, same positions you're getting into. Your average P&L was about the same. Your risk was about the same. It's just a distribution of how those trades ultimately ended up filtering out. So you can see out of the 700 plus trades that we got into, 373 were taken early for profits, which is pretty good. So about half of the trades were taken early for profits, which is encouraging. So this was really exciting to see this first one go through. I didn't know what was going to happen with this. It doesn't always happen this way. So again, you test it for different strategies. I'm not saying that 10% is going to be the one that does this for all strategies. It's not, but for this one, it did help. So the next one that we tested was 25%. So now we overlay a little bit higher profit target. So the idea with testing these different ranges, of course, we want to know, what's kind of optimal for this strategy, but it is also an idea, like thought process wise, where you're taking in a big credit and now you're saying to yourself, okay, if the baseline strategy generally works over time doing nothing, which is just letting it go to expiration, then let's, kind of push the envelope here. Let's go to, 25% profits, see what we can get out of this. So again, visually what you see here is you see that the strategy performed essentially the same in the early years as the baseline strategy, started to pull away a little bit, ended just a little bit higher, spent a little bit more time in the positive P&L territory, which is encouraging again as well. But you didn't see, I don't know, I mean, it was very close on some of these metrics. Some of them are a little bit worse. Some of them are a little bit better. This is where you kind of have to pick and choose kind of which ones are important to you. Top line P&L was better. Okay, that's great. Max risk, the max amount of capital that you risked at any point was, again, cut in half. Your max drawdown was actually a little bit higher than B. So you did have a drawdown at some point that was a little bit higher than if you did 10% profits. Still had a pretty good profit factor, still improved on the baseline, which was good. Your win rate, though, dropped back down. You can see it kind of landed essentially in between these two. So this is baseline, this is 10%. We started to go towards 25% profit target. You're better than the baseline. You're better than letting it go to expiration for sure. But you're not as good as the win rate here. So what you did see is of course, your loss streak go up, your win streak go down. These are all things that would be expected to happen. Your total P&L average was about $9. You did improve your return on risk, which was pretty good. And then again, you can see down here at the very, very bottom, you had about 173 trades that you were dealing with that eventually got to that 25% profit level. So you're still dealing with a smaller number of trades that got to that profit level, but you were able to take them off. So I would say at this point right now, for me, the winner would still be C, even though it's got a little bit lower profit factor and a little bit lower win rate. Still on a return on risk basis, it still looks like it's going to be a good one and definitely manageable max drawdown and max risk. Even though it wasn't as good on the max drawdown here, these numbers are completely manageable compared to the baseline scenario. So for me, that's an improvement here. So let's see if we can keep pushing the envelope here. Let's go to 40% profit. So 40% profit was very interesting. You can see this new, I don't know what color that is, teal line, something like that, kind of like bluish teal green. But you can see this one was a noticeable improvement. Again, very early in the strategy, not so much of an improvement. It's not till you get towards the later end of these that you see a significant difference. By the way, and just like a total sidebar, but this is like one of the things that I hate necessarily about when people try to compare strategies back to back over such a short period of time. Like, there's just not enough trades in here to really see the spread and the divergence out. Like, the analogy I would use is if you're leaving from New York and you're going to LA and you're taking different paths, like the first couple hours of your trip, it looks like you guys are about the same area. You're taking about the same highways, maybe you're traveling about the same speed. But if you start taking really different paths, that time and distance is going to be, greater amplified over the longer period. So I think what we saw here is that, again, a lot of the strategy ended up being, roughly the same in that first early period for profit taking. And then you started to see, in this case, strategy number D start to break away, which was 40% profit. So noticeably, it broke away from the pack, which is important here. It spent a lot more of its time above the zero barrier, which is really important. So let's go down and start digging into some of the stats here. So, all right, so stat-wise, you can see number D definitely improved the total P&L overall. You can see max risk was about the same as C. Max drawdown was a little bit bigger. That does make sense that we would have a little bit bigger drawdown. We're trying to shoot for 40% profits, which means we're holding positions conceivably longer through that period of the zero DTE. We're trying to really squeeze as much premium out of it. The win rate dropped back down considerably. It was just above where the baseline scenario was. So on a win rate basis, you basically won about the same amount that you would if you would have held it towards expiration. You can see that your loss streak started to increase again. Your win streak started to decrease. Again, these all make logical sense as we go towards that higher profit target. What the difference was, I think, was down here. So down here, we started to see really what the difference was that your average P&L on your trade started to increase. So notice that all of these baseline scenarios so far were 9%. We had 13, 14, right? We started to increase those up. And it's now here that we start to get to return on risk about 18%. So we didn't have as many trades that were closed for profits, but it looks like closing those trades for profits early did help us avoid other trades that were significant losers of that batch. So of that 82 batch, a lot of those ended up helping us avoid trading scenarios where maybe the profit was erased by the end of the day. And that's what I think really helped contribute to such a higher return on risk for this particular strategy. So again, it was very interesting. So next thing we did is we tested 50%. Of course, we're just going to keep going with this and see if we can improve this at any point. So if 25 is better, now let's look at 50, 40% is better. Now let's look at 50%. So 50% here, you can see it's very close to the line, the teal line, which is the 40% strategy number D, and it actually underperforms. So if we go down here and we kind of look at these stats, this is where I think it's pretty interesting. You start to see these differences start to, kind of express themselves. The P&L went down, the max loss went down a little bit. Your max drawdown was essentially the same. No improvement there. Your profit factor was actually reduced. Your win rate was actually reduced, right? You came back essentially to the same loss streak and the same win streak as doing nothing at all. So taking 50% profits, essentially for streak wise didn't really help out. You did see that it was better to take 50% profits than to do nothing at all. So even though your win rate was about the same, your loss streak, all of that was about the same, just taking profits early at 50% did improve the strategy in this case. It was only 43 scenarios where that happened. but those 43 ended up being very important to not turning and flipping potentially the other way. And so this was actually pretty important for helping keep your average P&L still high, your average return on risk still high, etc. Again, a decline in many of these metrics compared to 40% profit. So at this point, I would say 40% profit not as effective, or 50% profit not as effective as 40%. But let's test one more scenario. Now, by the way, just so you guys know, I'm going to get rid of the expiration in this example. So I'm going to dump the expiration one because we do have other ones that are very much the same and similar, just because we can only fit so many strategies in a compare. But just remember, it's about 25%. Win rate here, about $6,000. So let's just see what 75% would have been. All right, so this is 75%. Again, this kind of shifts things around a little bit, but just look on the right-hand side here. We got 10% as our new A, B is our 25%, C is our new 40%, D is 50%. And just because we wanted to test and see, maybe we hold things much longer into expiration, try to capture a big profit. Did that actually help? I often see people do this a lot, and I will hear people talk about this a lot. Not that it's always great, but the concept around testing this is something like, hey, I can try to capture a lot of profit, but not all the profit, right? And maybe that helps the strategy. And maybe in some cases it does. In this case, it did not. It did not help it at all. You can see that the total P&L was about the same as the baseline. Win rate was about the same as the baseline. You got it back, dropped it back down to 9% or $9 of average P&L. You dropped your return on risk back down. And essentially, you can see here that you took no profits. So essentially, that was the reason. So news surprise, news flash. There's nothing broken here with this test. It's just that it essentially did nothing different than baseline because there was nothing that reached a 75% profit in time to take the profit off. It really wasn't that case that it didn't reach that 75% profit. So if you ever get these, by the way, this is the reason I added it in here. It's not that anything's broken. It's not wrong with it. It's just that it didn't reach 75% profit. So let's do this. We're going to go in here to the settings for this one. We're going to adjust this one. We're going to go marginally above the 50% just to see if we can test something that goes, let's say 60%. And try to test that as well. See if we can't get some of those trades to kind of roll off. Again, 43 of those trades were closed at 50% profit. So if we do 60%, we might get some of those. Maybe it improves the baseline strategy. Maybe it doesn't. So we'll go ahead and run this backtest. So while that backtest is running, we'll let it run in the background. We'll come right back here in 2 seconds. All right, so that strategy finished running, and you can see here that that strategy is number E, and just visually, you can see how bad this one actually performed. You had much lower, it still essentially performed not as great. It was basically at the same endpoint as strategy, like the baseline scenario. However, you did lose more money. It did not perform as well. So actually 60% in this case, not optimal at all. And let's look at some of the stats here. So we don't have the baseline scenario to compare directly, but it was about $6,100, about a 25% win rate. You can see you lost more money on this one, holding to 60%. So if you thought that you were going to try to squeeze a little bit more premium out of some of these trades and try to wait for 60%, but not full premium at expiration, you actually really did yourself a disservice. So you lost more money on this one compared to the others. Your win rate was not as great. I think your win rate went down compared to the baseline. Still the same kind of streak metrics, win rate from before. Your average P&L did go down. Your average return on risk went down. You only essentially took profits on 10 trades. However, in this case, it looks like those 10 trades where you took profits early at 60%, those 10 trades, you should have let go all the way to expiration because it would have been better for the strategy overall. Basically, you left money on the table, taking profits early and not leaving the position on to go to expiration. So it's a little bit different there than some of the other ones, but very interesting nevertheless to look at how these perform. So in this case, it looks like the best strategy for this scenario definitely looks like, again, it's strategy number D, which in this case, strategy number C in this case, which is going to be 40%. That was the best one, I think, in my opinion, strategy number C. So that's 40%. And I think that the return on risk was really good on this one. Your average P&L was about $12 on this one. I think what was cool about this one to me was that even though you didn't have the super high win rate here, because it's not a high win rate strategy. If you wanted to go with a high win rate strategy, you'd do something wider like an iron condor or something like that. But you did improve the baseline win rate here. And the streak, I think, was generally manageable because the overall risk per position was okay. If you're starting with a $10,000 account, going through a 25% drawdown at some point, totally seems reasonable for an option strategy. If you don't ever go through a drawdown, that's where it probably seems unreasonable. So pretty good profit factor here, 1.27 as well, and definitely had the highest P&L overall. So it was definitely a very interesting strategy. This is C right here. You can see it was definitely spent most of its time above the zero barrier. You did go through a couple periods where it just felt like you were chopping around a little bit, but hey, if you're running it with bots, you don't feel that experience. You can just let your bots continue to run the strategy. So, all right, so what to do with this now? So this is what I'm going to do personally. Again, this is not advice. This is not a recommendation. You do whatever you want to do. This is what I'm doing personally. I already run a 0DT strategy that's an iron condor strategy at the end of the day. I know in my other videos I'm looking for a next day strategy as well that I want to introduce, but I currently don't run another 0DT strategy. And I like the idea of doing something like an iron butterfly that can try to capture a little bit bigger premium with a little bit less risk adding to my portfolio. So I do like strategy number C here to potentially run. So what I've done is I basically opened up strategy number C in a new tab. And I've also added to this my current backtest that I've run for my existing bot that I run, which is my 230 entry iron condor. So you can see this is strategy, was strategy number C, but it's basically that iron butterfly at 150, taking profits at 40%. And then you also have an iron condor here that I'm currently running. And so what I wanted to do is I wanted to see, okay, do these strategies essentially conflict one another? Do they decrease when combined together? And if I just combine the results here together, you can see that the performance of the P&L curve is obviously much better. And it doesn't really harm or hurt to have both of these strategies running. Sometimes if you combine the results, you get a P&L combined curve that goes the wrong direction, which means that one strategy is hurting the other strategy by executing them. So that's why we put that in here so you could see it. Just if you go down here to metrics wise, the thing that I like about potentially adding these two things together, they both have, pretty decent profit factors. They both have manageable max risks and drawdowns, right? Obviously, strategy number B right now is, projected to make more money from the backtest, has a higher win rate. That makes total sense because it's an iron condor. What I've never liked about this one, at least just trading through this one here, is that it does have a pretty high premium that you end up going in these streaks where you end up very quickly going to $1,000 loss or $2,000 loss with a couple $250, $260 losses, right? And so what I like about this one is that when you're risking, like the strategy right now currently risks on average about $250, $260, $270. So you get into a streak of 2, 3, 4, 5 losses in a row, you're quickly down at that $2,000 range. So adding this one in here now, only risking $64, I think is a good addition because it's not like I'm layering another set of $200, $500 of risk right now. It's a very simple addition for risk on a daily basis and something that seems manageable. And again, overall, this strategy when combined with the other one seems to do pretty well as a combined pair. So what I'm actually going to do is I'm actually going to currently run this strategy. I'm going to run it in a separate bot. I could actually run it into a existing bot if I want to and just create a new bot and add that one in there. But in this case, I'm going to run it or create a new automation for this and then run it in that bot. But I'm going to actually add this as a brand new bot to my portfolio. And I'm going to start running it live here today. So 0DT, SPX, we'll call it Iron Butterfly, slightly bullish. We'll just call it Iron Butterfly Bullish Tilt, so that we know what it is. I'm going to put it in the same trading account, which is my TradeStation account. Starting capital, going to do the same thing at $10,000. Scan time when it was back tested was scanned once per day at 150. Obviously, I'm going to increase that time range just a little bit. So I'll probably go just slightly outside that time range. We'll go 140-ish to about 2 o'clock if we need to get into a good position. I don't think we'll need much more time than that. So just kind of brackets that 150 range just a little bit. and tries to get into that position if needed. So opening the trade, we'll do 100% of the bid-ask spread, and actually we'll go up to 5 cents of slippage from the mid, which is what we tried to do for the actual back test as well. So that's good. That's in there as well. And actually, you know what we'll do? We'll make it a little bit more aggressive, and we'll go basically right at mid price. So we'll do this. We'll go 0 from the mid. And we won't do 100% from the bid-ask spread. We'll just go 0 from the mid. So basically right at mid price, wherever mid price is, we want to try to get in there. We've got lots of time to get attempts. And then closing trades, we'll definitely do 100% of the bid-ask spread. Again, because of profit taking, it's going to try to lock in that profit up to 5 cents of slippage from there, but it's still going to make sure we get that profit target of 40%. So I'm not worried about that one there. And then we'll simply hit create bot. I'll go over to our bot settings here. This is our new bot that we have here. Here's our entry scanner run set up for the market conditions. Going to change my safeguards or scan speed to every 1 minute. Again, we're only allowing one position at a time. We are allowing day trading in this. My account does enable day trading. If your account doesn't allow day trading, you're going to want to turn this off, maybe test a different strategy, because this is taking profits early on a 0 DT strategy. So make sure you got that $25,000 account size to run this overall if you need to. And then all I'm going to do is turn on automations and let this thing start running. So this is going to be a new one. We're going to put this into my 0 DT bot group so I can look at all the 0 DT trades that I'm doing in one single group for analysis and for tracking. But this one's running now. And I didn't actually have the intention of doing this necessarily, but I like the idea of doing something a little bit more iron butterfly type that kind of mixes well with my iron condor that I'm running at the end of the day. I like that both of these positions are end of the day positions. We don't trade them through FOMC, so we don't have to worry about kind of that end of the day craziness on Fed days. But otherwise, we're just going to try to get into a lot of positions, let the numbers work out over time. So hopefully you guys enjoyed this video. If you did, let me know. Add a comment below, like, share, subscribe. Make sure we get this into hands of other traders who are like you. And until next time, happy trading.